Hey, what's up, guys? Houston here. Why do you need $150,000 in funding? All right. Now, for some of you all, you may be saying, well, that's a stupid question. Well, actually, it's a legitimate question, and that's exactly what most people are not aware of when it comes to your bank and you're trying to raise capital. I don't care if it's on the business side or personal side, they ask, why do you need the money? Okay, and the thing about it is not being able or not being prepared to answer this question, it can end up getting you less money. All right, now the thing about it is with that comes with that $150,000, let's take it to the board, is are you looking for personal funding or are you looking for business funding? Okay, so that's another question. All right, what are you looking for? Personal funding or business funding? All right, that's something that you also need to answer. Another thing, are we going to be using your personal credit or are we just going to be going off of your EIN? Okay, this is also important. A lot of times people jump in and they say, well, I need $150,000. Well, being prepared, what is it that you need it for? How are you prepared to actually get access to it? Okay, now another question is, are you working? Okay, are you working? Do you have a job or do you have an existing business? Okay, how are you able to pay back this loan? All right, now for some people they probably already clicked off by now, but at the same time, for those that stick around, you're gonna understand why you need to understand this. Because I see so many people, they're talking about they want these large amounts of money. And the thing about it, they're hearing, well, this person say he can get me 150,000 or whatever. But I promise you, without actually understanding these questions, then you're going to screw yourself. All right? Because you need to know this. Now, that being said, where do you start? Okay? Where do you start? Well, the thing about it, your personal credit, is your personal credit bad or is it good? Okay? That's the thing about it. Is it bad or is it good? A reference to the EIN number, okay? Are you bringing in revenue or are you a new business? These are legitimate questions that you need to be asking yourself in terms of what is it for, all right? In terms of, all right, what are you going to do with it? Remember I asked you, like, what's the purpose of it? What are you going to do with the money, all right? Is it going to help you with your business? Or are you trying to know, doing a trip? You trying to put a deck on the back of your porch? Are you remodeling? What's the money for, okay? You have to legitimately answer those things, all right? Now, in terms of, well, where do you even go, all right? Where do you start, okay? You trying to get $150,000 in funding, where do you start? Well, here's the thing about it. You have 5 levels, okay? You have 5 levels of funding, right? Now let me show you this. You have tier 1, tier 2, tier 3, tier 4, and tier 5, okay? Now, the thing about it, what are you starting out with? Are you starting out with bad credit or good credit, all right? That's the reason you need to be able to answer these questions. Now, if you're starting out with bad credit, then your bad credit for is the tier 1. This would probably be more likely be your CDFI, right? And I'll tell you some of the lenders for this, or your tribal, okay? These are your tribal lenders, all right? Do it like this. Hopefully I can keep this in line. So that way you understand it's going to, that your tier 1, when you have bad credit, is a CDFI or your tribal, okay? So the examples of those would be like Opportune, okay? opportune because they go up to 10,000, and all you need is a minimum of $500 after taxes to show proof. All right, and so this is a CDFI. All right, then in reference to your tribal lender, okay, so your tribal lender, and if I'm doing a good job, I ask you guys is to leave me a nice comment, share it, let me know if you find any value in it. All right, I appreciate it. Also give me a thumbs up to help the algorithm. All right, now here's the other thing about it. So that's an example of a CDFI. Your tribal lender, okay, so your direct tribal lender would be like Rise Credit, okay. Now here's the thing about it. With tribal lender like Rise Credit, they go up to $5,000. All right. Now, please understand, with tribal lenders versus the CDFI, the tribal lenders' interest rates are going to be much higher. Okay, so that's something you have to understand. All right. So that's the first thing. Now, you do have low credit finance, okay? So low credit finance is a platform, all right? Now they deal with tribal lenders and other type of CDFIs. Now their interest rates go anywhere from 5.99 up to 35.99, all right? And they go up to $50,000 with the low credit finance, all right? But this is your tier 1, all right? Now, your tier 2 lender that you want to look at, that would be your fintech company, okay? So like with your fintech companies, they look at other data points, all right? And so what I mean by other data points is not only are they looking at the credit score, they're looking at your education level, how long you've been on a job, how long you've been at an address. So that's the things that they're actually looking at, all right? Now, that being said, think about it with fintech, okay? So many of you hear me talk about universal credit, okay? Now, with universal credit, they go from 1,000 up to 50,000, all right? Now, also, as a fintech, again, you also have to take into consideration your debt to income ratio, all right? So with your debt to income ratio, they will work with you with a 75% debt to income ratio, all right? So that's the reason why I tell you, you work backwards. When you have bad credit and you're trying to build up funding, you work backwards versus the other way that I'm going to show you when you have good credit, okay? Now, and like when you have good credit, let me add this on. When you have good credit, okay, because you have a little more flexibility, then you can be more picky about your situation, all right? But when you have bad credit, and also depending on the income as well. So going back to this fintech, you definitely would want to have at least an income of about 45K or up higher, all right, in order to qualify for loans through them. Now, here's the thing about it with these fintech type of companies, is that the fintech type of companies is that your credit file has to be 2 years old, okay? It has to have at least 2 trade lines as well, all right? So that's with your fintech type of company. Now, your tier 3, when you have bad credit, okay? The tier 3, when you have bad credit, is with your credit union, okay? Now, here's the thing about it with credit unions. In reference to, they're looking at the DTI, okay? So your debt to income ratio. So usually if your debt to income ratio it's over 55 to 60%, they may not want to give you a loan, even if you have an 800 credit score. So forget about the bad credit score. Even with a 800 credit score, if that debt is too high for them, they will overlook you. All right. So that's the reason people revert back to like your FinTech or your CDFIs in order to get funding. All right. Now, some of your examples, of course, we know about Navy Federal. Okay. So with Navy Federal, we know they go up to 50K. And some people are shocked because they wonder, well, I had a 750, 800 credit score and Navy Federal would not give me a loan. Well, again, it's because of what? For most people that follow me, you know that it's because of this internal score, okay? This internal score. And with this internal score, of course, you know it has to be anywhere from 100 up to 450. So Navy Federal, this is why I continue to tell you, Navy Federal is going off of relationship based. All right. And so with them, they're talking about like direct deposits, checking, savings, a CD, or maybe a money market account. All right. That's just on the personal side. So having multiple accounts with them. So that's the reason why some people with an 800 credit score, they're like, well, they didn't want to give me any money. Well, again, it's a relationship, and also determined by how many products. Now, you also have DCU, Digital Credit Union, right? Now, many people know about their short-term payday loan, but it's only $2,000, okay? So it goes up to $2,000. Glad I caught that. So that's the thing about it, going from tier 1 to tier 3. All right. Now, tier 4 would be your regional banks. Okay. So tier 4 being your regional banks. This is the interesting thing about it. Many regional banks, they don't offer hardship type of loans, okay? So with your regional banks, even with Truist used to offer like a small dollar emergency loan. Now where they don't, and I'm talking about where they don't pull the credit, of course, all right? So that's the reason. Now Huntington Bank, they offer one. Again, those are small dollar loans, all right? Then you also have Wells Fargo, you have Bank of America, BOFA, and you have US Bank. Now, all of those, they usually offer a small dollar loan. Now, understanding that in terms of regional banks, Truist, Huntington Bank, those are the ones that are your regional. Your Wells Fargo, Bank of America, US Bank, those are your national banks, okay? So that's the reason why. And again, it also goes back to your DTI as well as the credit score, okay? Now, here's something else that I want to add to this before we go to tier 5, and this is very important. With these tribal lenders and these CDFIs, they won't do a hard pull on your credit, all right? Even with your FinTech, they may not do a hard pull on your credit, okay? And the reason is they're using third-party credit bureaus in order to see what's going on with the credit file, okay? So that's the reason when you guys hear me, and I'm gonna write it over here, when I tell you that Clarity is owned by Experian. You have DataX, which is owned by Equifax, okay? Then you have Factor Trust, which is TransUnion, all right? So you also have, don't forget, LexisNexis, So some of these will check your LexisNexis to see what's going on. All right. There's one more that I can't think of off the top of my head, but it's owned by Equifax that actually will check. Okay. So for your tribal lenders as well as your fintechs, they're checking these systems here, okay, in order to see if you qualify. So it's something you can keep in mind. Now, here's another thing. Let's talk about Tier 5. Tier 5 is your major banks, okay? So again, going back to your major banks, when you have bad credit, they're not going to give you big dollar funding, okay? Now, one of the key things in terms of with the major banks, the only way that they will give you big dollar funding is in terms of if you have a business with revenue in it, all right? And that'll be in a separate video because I didn't want to make this video too long, all right? But at the same time, with the small dollar loans on the major banks would be your Wells Fargo, Bank of America, U.S. Bank, okay? Those are with your small dollar loans, all right? So the thing about it is, in reference to if you're trying to raise $150,000, the thing about it, understanding whether it's going to utilize the personal or that you're going to utilize the business, okay? And understanding what it's for, all right? So I'm going to make a separate video going in with the good credit, so that way, again, I won't make this video too long for you guys, all right? So I'll see you in the next video.